private banks are starting to re-rate versus PSU banks, which have outperformed for the past 4 years. So I think that trend still has further upside despite this week's underperformance from the private bank side. And then versus the broader market, we have been underperforming on the bank side. But ultimately, I think once we're through this corrective phase, I would look for private banks to be one of the key drivers to the upside, and it's starting to show up relative to the PSU banks first. So yes, in absolute terms, we've got a lot of volatility, but that relative price action, I think, is quite telling for a longer term view.
I do believe that financial services is one basket that can really make a big comeback this year and take leadership. So I'm talking about the top banks, the NBFCs, and the insurance companies. So the financial services index, according to me, should be one of the star performers going forward. The other sector, which I think can now take leadership, is auto. So I think auto is a space that we like. All the top stocks, the top 3 or 4 names, after this correction of the last 6 months. So that can also take some sort of a leadership. We also like real estate and metals. And we believe that at current prices, again, the risk reward is excellent for long-term investors.
I would hold some gold as a reserve. I don't speculate in gold. But last year was a good year for me because the value of paper money has gone down 30% compared to gold.
While the numbers being somewhat under expectation, higher competitive intensity, few more players coming and all of that is more in the context of what markets or analysts expect from a quarterly perspective. I still think on a longer term basis, these businesses still have a very long growth curve ahead of them. I still hold my view that some of the leading companies of India, probably 15 years out, will emerge from disruptive tech, be it consumer tech or fintech. I think one of the top 5 financial services company will be a fintech.
If you like this video, then like, share and subscribe to ET Now.